2020 has been a bit of a whirlwind. We've seen sub $5,000 Bitcoin, a global pandemic, turbulent stock markets, and the explosion of DeFi. In all that chaos, some managed to spot hot trends before they took off and made bank. Right now, there is a ton of noise surrounding DeFi. However, there are other sectors and opportunities out there that are simply being lost in all that hype. So, what sector am I talking about? Well, that would be non-fungible tokens, or NFTs. It's a field that I have covered quite often in the past, and more recently have been scouting for some hidden gems. After weeks of detective work, I think I have uncovered such a project, and that would be Rarible. I'm Guy, and in this video, I'll explain why I think that NFTs could be the next hot sector in crypto. I'll also take a look at Rarible's NFT marketplace, the use case for the token, and its tokenomics. All that is to help you decide if this microcap gem is worth it. Before I get started, I need to say a few things. Don't let my British charm fool you. I am no financial advisor. So sorry to disappoint. That means this video is for educational purposes only. Be sure to consult a real financial advisor before making moves in the crypto space. I also want to welcome anyone new to the Bureau. I've dedicated myself to researching and creating useful guides and coin overviews just like this one. If that's something you're interested in, then you can make me your crypto guy by smashing that subscribe button and switching on those notifications. Do that and you won't miss out. Finally, I know that time is the most valuable commodity of all in life. That's why I've provided handy timestamps below. You can use them to skip ahead to different sections of my analysis. Okay, have you got your hard hat on? Let's go crypto gem mining. Seeing that Rarible is an NFT marketplace, I should probably kick things off by explaining what a non-fungible token actually is. If you know all about that, then feel free to skip ahead. Alrighty, so NFTs are digital collectibles. These special cryptographic tokens basically represent something unique and have 4 key properties. They cannot be counterfeited. They cannot be replicated. They have the same ownership rights and guarantees as Bitcoin. However, digital collectibles can be personalized and unique. And you cannot print NFTs on demand. That means that NFTs are something different from something that's fungible and perfectly interchangeable. A great example of that is the Great British Pound. Now, I don't know about you, but I'm not exactly discerning when it comes to a crisp £20 note. A £20 note is the same as any other. That means that they are perfectly interchangeable and are therefore fungible. However, something is non-fungible when it's not easy to mix it with other assets or goods. So that would be something like a collectible. A great example of that would be Pokemon cards. Yes, I know my age is showing here. When I was growing up, everyone knew that a shiny Charizard was the card you wanted. Turns out that the younger me and my mates were geniuses when it came to identifying value, and that shiny Charizard can now fetch a whopping $85,000. However, a bog-standard Pikachu card from around 20 years ago is worth about the same amount as a pack of toilet paper. Now, the point is that these cards are not interchangeable or equal. One is a super rare Pokemon card worth tens of thousands of dollars, and the other is a pretty common card with millions of copies out there. So, these Pokemon cards can be said to be non-fungible. Oh yes, in case you wondered how my Pokemon collection went, I really did catch them all. Now back to crypto. So, the most famous example of an NFT is probably a crypto kitty. These digital cats looked different, had different colors and rarity, a lot like those Pokemon cards. The other thing to know is that there are actually 2 major types of NFTs. First, you have ERC-721 tokens. These are non-fungible and the tokens are simply not the same. An example would be those different crypto kitties. Next, you have ERC-1155 tokens. This type of NFT combines the benefits of both fungible and non-fungible tokens together. What do I mean by that? Well, if you're a bit of a geek, like me, then you might have heard of the game of World of Warcraft. For those that have not, then all you need to know is that there is a fungible in-game currency called gold. 1,000 gold is the same as any other 1,000 gold. However, there are special in-game items like super rare magic swords. These are non-fungible items that you would not swap for a regular sword. What the ERC 1155 standard allows you to do is basically issue both fungible and non-fungible tokens. Now that's pretty damn useful for people like game developers. It's easy to think that NFTs are nothing but trivial playthings with little value. However, let's look into the current value of this market, shall we? NFTs burst onto the scene in 2017, and since then, total NFT sales have hit over $100 million. Now, compared to the billions of dollars locked up in DeFi, I know this may sound like chump change. However, we only have to go back to April 2018 to see when DeFi first crossed the $100 million mark. Flash forward to today, and you have a plethora of DeFi projects like Aave and Yearn Finance commanding market cap valuations of over $500 million. So, what are the main drivers for the NFT sector in the near future? Well, I think one of those key drivers will come from computer games. Right now, the virtual economy has reached about 2.5 billion people. Many of these games have developed internal markets and economies with currencies that players use to buy or sell virtual goods. Just think about Vbucks in Fortnite or gold in World of Warcraft. Now here are some shocking stats. In 2019, $109 billion handed over for digital in-game spending, and that's projected to grow to $129 billion in 2021. Also, there are around 40,000 digital asset creators right now that are earning up to $122,000 a year just by making items for Second Life, Decentraland furniture, and other in-game items. Pretty crazy, right? That popularity of virtual platforms has spawned a multi-billion-dollar industry of Wild West black market trading of in-game currencies and items. Indeed, that's a direct result of many marketplaces in the virtual economy being owned and controlled by game publishers. That's certainly a downside for centralized in-game marketplaces. John Egan, CEO of L'Atelier, a company dedicated to spotting emerging digital trends, has come out to say that he believes that, quote, decentralized platforms and NFTs are the most interesting, if not the optimal solution. Yes, it is true that most game publishers are probably going to resist giving up control of their own in-game economies and items. However, Coincheck and Engine have partnered up to create an NFT for the hugely popular game Minecraft. So, how many people play Minecraft? Well, just a casual 126 million. Now, for those that don't know, Coincheck is the biggest crypto exchange in Japan with around 3 million users and is in the process of creating its own NFT marketplace. The main takeaway here is that the Engine and Coincheck partnership is likely to significantly increase the total value of NFT sales in the not too distant future. That's probably going to be good news for NFT marketplaces like Rarible. It is true that there is a range of different blockchain games with NFTs, such as Decentraland, Cryptovoxels, and more. However, these games have a tiny fraction of the user base that Minecraft has, and are honestly the preserve of early adopters and tech geeks. Blockchain-based art is another interesting emerging NFT sector. We have seen marketplaces like SuperRare and Makerspace take off. These platforms essentially allow you to collect, create, and sell rare pieces of digital art. This allows artists to create limited edition artwork which is tracked on the blockchain, making it rare and collectible. In a way, that democratizes the whole process of selling art by giving artists the freedom to sell their creations to fans and to cut out traditional galleries, who inevitably take a massive slice of every sale. Then you have blockchain domains, which are used as payment gateways and to put up uncensorable websites. Ownership of these domains is done through NFTs, and there are a ton of people speculating on their value and buying up these hot domain extensions. Around a month ago, the blockchain domain sex.crypto actually sold for 230 ETH, and other .eth domains have sold for even more. So you should now have an idea of the potential growth of the NFT market and a few of the key drivers that could make this sector explode in the future. If you want to learn more about NFTs and why I think they could be the next hot sector in crypto, then be sure to check out the video right here. I now want to move on and look at the competition in the NFT marketplace space. Okay, so I want to be straight up and just say that OpenSea has the lead when it comes to total NFT marketplace volume. That's in part due to OpenSea taking a broad approach and supporting all types of NFTs, whereas other platforms have taken more niche approaches. When it comes to art-focused NFT marketplaces, SuperRare did have the lead when it came to that niche. With all that being said, Rarible has been shooting the lights out recently when it comes to NFT marketplace sales. Indeed, in September, Rarible achieved over 10 times the platform sales as OpenSea. What's super interesting is that while Rarible was setting records and crushing those sales figures in September, SuperRare and OpenSea both saw pretty drastic drop-offs in volume. This seems to indicate that Rarible is actually cannibalizing sales and users from its competitors. I now want to move on and zoom in on the Rarible marketplace. So, let's do that, shall we? Rarible aims to be the first decentralized and community-owned marketplace for NFT assets. Indeed, the ultimate goal of the project is to become a decentralized, autonomous organization where platform users call the shots. More on that a little later. Right now, you'll mainly find two types of NFTs on the Rarible marketplace. That would be blockchain-based art and crypto domains. The way to look at this art is that licensing is done via NFTs. Content creators can actually add unlockable content to collectibles that only becomes visible once you transfer ownership. This can include things like unlocking high-resolution videos which showcase the creation of how the artwork was made and include secret messages. Another neat feature is that creators can select a percentage as a royalty for secondary sales. So, for example, I might put up this cracking piece of artwork for Guycoin and set my royalty to 20%. If I sell my digital masterpiece for 1 ETH and the buyer goes on to sell it for 100 ETH on Rarible, I would get 20% of that sale as the original content creator. So I'd bank a solid 20 ETH in this example. With that being said, Rarible does support in-game items. An example of that is a pretty cool game called Neon District, where each piece of gear is a unique NFT. If you're the type of person that likes to pimp their character out with some cool shades, then you can do that by buying that piece of in-game gear on Rarible. Another super interesting NFT type that Rarible recently announced support for is NFT tokens representing Yearn.finance smart contract insurance underwritten by Nexus Mutual. What that means is that it's now possible to actually take out tokenized insurance policies on your DeFi dabbling and actually trade them. The key thing to note here is that these insurance policies are for varying amounts, apply to different platforms, Compound, Synthetics, Balancer, etc., and expire at different times. Essentially, Rarible has created a marketplace for NFT-based insurance out of nothing, and I can't for the life of me work out why nobody else has thought of this before. However, it does serve as an example of how Rarible is a bit of a trailblazer when it comes to creating innovative products. Oh yes, a few other things to note are that Rarible is entirely non-custodial, so those folks at Rarible couldn't siphon off your NFTs even if they wanted to. Also, the platform allows you to connect Fortmatic, Wallet Connect, and Wallet Link wallets. That means if you want to use the marketplace, you'll have to set one of those up. In case you were wondering, Rarible does support both ERC-721 and ERC-1155 tokens. Indeed, those ERC-721 tokens make up about 60% of the platform's volume, with the other 40% being made up by ERC-1155s. The interesting thing to note here is that this does seem to indicate that, despite the ERC-1155 standard being around for significantly less time, it is gaining traction. Now that you know about the nuts and bolts of the Rarible platform, I want to talk about its token, RARI, with the ticker RARI. So, what is RARI and how is it used? Well, remember that I told you that Rarible is aiming to become a DAO. A key component to making that happen is governance, and that is where RARI comes in. In short, it's a governance token that gives the Rarible community the power to influence decisions and incentivize certain actions in the Rarible marketplaces. However, that vision of a DAO is still a long way off. Those RARI tokens are currently limited to two things. Firstly, community voting. This means that RARI holders can submit or vote on proposals about Rarible's trading fees, new features that the team should work on, and the use of RARI to further decentralize governance. The key thing to note here is that votes are advisory and not binding. That means that these community votes are simply the Rarible community saying, hey, we would like this to happen, and that the Rarible team still have the final say. Then, secondly, we have content curation. This is when the community decides which NFTs to showcase and feature. After all, those NFTs that are showcased first are more likely to attract sales than those buried at the bottom of a long list of thousands of others. The token is also being used to acquire marketplace users and incentivize NFT trading on the platform. The team has named this marketplace liquidity mining. What this means is that 75,000 RARI tokens a week are shared amongst people who have made a purchase or sold an NFT on the Rarible marketplace. Honestly, I think it is this marketplace liquidity mining that has driven the surge in trade volume on Rarible this September. Now, I know that governance may not sound like a big deal, and indeed you might be scratching your head wondering why RARI has any value whatsoever. A good way to explain this would be to take a look at Google. Founders Larry Page and Sergey Brin actually own just over 11% of Alphabet's entire equity. However, thanks to super voting shares, they have over 51% of the voting rights for Google. So, why go through the hassle of setting up these super voting shares? Well, the Google founders worked out that to be in control of the company, they didn't have to own all the equity. Instead, they could just have 51% of the share of votes. So, if the two Google founders agree on something, it will happen, despite them only owning about 11% of the equity. The point of this little story is that voting rights are typically highly valued because they enable people to shape the future of a company or, in this case, an NFT marketplace. So that is why the RARI token holds value. It basically represents the voting rights for when Rarible transitions to a DAO. And that may involve things like marketplace profit distributions to token holders. I now want to take a look at the tokenomics of RARI. So let's dive in. There is a supply cap of 25 million RARI tokens. 60% is allocated to marketplace liquidity mining, 30% to investors and the team, and 10% in airdrops. This airdrop allocation is split, with 2% going to Rarible users and 8% to all current NFT holders. So, if you hold NFTs in your Ethereum wallet, then chances are you have some RARI tokens there now. What this does is give future governance rights to early adopters of NFTs, which are probably the type of people you want voting on NFT marketplace decisions. With marketplace mining, there will be 75,000 RARI tokens released into the circulating supply every week. It is true that this incentivizes people to use the marketplace. However, it does also mean a heck of a lot of inflation. Put it this way, there are only around 850,000 RARI tokens in the circulating supply right now. Of course, there are 52 weeks in a year and 75,000 tokens in inflation a week. When I run that through a calculator, it comes to a total of 3.9 million RARI tokens being pumped into the circulating supply every year due to marketplace liquidity mining. Yes, this is a great user acquisition tool, but that's a heck of a lot in inflation, and certainly disincentivizes speculators to hold the token for the long run. That has been recognized by the Rarible community and is why there is an open proposal to build a token burn mechanism. It's been suggested that marketplace fees be used to buy and burn RARI tokens. Talking about platform fees, there has been a recent community vote with over 90% of the votes advocating for 2.5% commission paid by buyers, 5% commission paid by sellers for primary sales, and 2.5% commission paid by sellers for secondary sales. So, you can expect those fee structures to be implemented into the marketplace. When it comes to holding RARI for the long term, you are gambling that token holders will vote in their best interest and push through things like token burns and profit distribution in the future. All that, of course, hinges on Rarible acquiring a ton of users and attracting exciting amounts of volume on the marketplace. So just be aware of that. I now want to take a minute to talk about the future of Rarible. An interesting thing to think about is how art is essentially a form of intellectual property, which is perfectly suited to NFTs. Things get even more interesting when you start thinking about NFTs as a form of liquid intellectual property. Come to think of it, every piece of digital content could technically have IP rights and be tokenized. That includes things like music, podcasts, or even videos like this one. So there is massive scope for NFTs to branch out and capture a ton of value. The Rarible team have also revealed that they're working on things like an NFT market index. That's super interesting because many people probably don't know what artwork to invest in. An NFT index would provide an option to buy a basket of different digital art pieces. That's just one use case, and you can easily extend that to a basket of blockchain domains or in-game items too. Other things that are being worked on is a price discovery mechanism for NFTs, a mobile app, social features, DeFi NFTs, fractional ownership, and more. Imagine if there was a super hot and expensive blockchain domain that's worth $1 million. Most of us don't have that sort of money lying around. However, I am sure there would be plenty of people keen to own a fraction of such an asset. Honestly, folks, there are so many things that could be tokenized by NFTs, and I really think we have just scratched the surface here. Okay team, this video is getting long, and so it's time to share my closing thoughts. In case you've missed it, I'm super excited about the NFT sector, and I truly believe that this could be the next big thing in crypto. I find it interesting how DeFi and NFTs are converging with the likes of Yearn Finance smart contract insurance, and how some platforms are even offering NFT collateralized loans now. I also cannot deny DeFi is hot right now, and Rarible's first move advantage in the DeFi NFT subniche seems to be a masterstroke. Monthly sales on Rarible are already 10 times bigger than its next biggest NFT marketplace competitor, and frankly, everyone else is now playing catch-up. The race is on for NFT marketplace dominance, and I have to say that Rarible is the favorite in my book. Already, it has shown its ability to innovate in the NFT space with those DeFi NFTs, and I am super excited about the idea of fractional NFT ownership and indexes. However, for Rarible to take off in a big way, the NFT marketplace needs to explode. With NFTs coming to Minecraft this year, I can only conclude that this will be a positive for the sector, whilst having insanely high upside potential. If that goes well, I can only speculate how many other games might start implementing NFTs and what that might mean for NFT marketplaces like Rarible. I'm not going to lie, the current tokenomics of RARI are not ideal. However, it is great to see that the community is pushing forward proposals to incorporate a burn mechanism to cut that inflation. Will RARI token holders make proposals and vote on initiatives to increase the price of the token? Well, I think that's a fair bet. The way I look at RARI is that it's an asymmetric bet on a microcap play that's already winning the race for dominance in its niche. And that is it, chaps and chapettes, my overview of Rarible. I've done enough talking, so it's now time to hear your thoughts. Do you think NFTs will be the next hot crypto sector? Are you bullish on Rarible? Use those comments. Oh yes, in other news, I've started a competition and I'm giving away thousands of USDT every month in my own exclusive promotion. I've also been able to secure you a tip-top bonus and a 15% trading fee discount. So, If that sounds interesting, be sure to check out the link in the description below. Finally, if you want to send good karma to this crypto guru, then be sure to hit that like button. If you'd like to see more of my videos, then make sure to subscribe. Just one more thing I need to say. If you enjoyed that video, then you'll love my weekly newsletter. It's basically my take on all the important trends and topics that may have flown under your radar. I also take a look at some really interesting projects and coins that you just can't afford to ignore. That be of interest? Well, quickly head on over to the description. I've linked to my sign-up form down there. All you need to do is enter your email and hit submit. Confirm the subscription, and that's it. A Coin Bureau insider. You're now all set and ready to receive my next email. And I will be seeing you very soon.